We will talk about the monetary policy in Norway. Norges Bank is the central bank of Norway, headquartered in Oslo. It has traditional central bank responsibilities such as financial stability and price stability. All the executive board appointments are made by the King of Norway after a decision by the Council of State. The chairman of the executive board, Øystein Olsen, who presides over the bank, is also the acting central bank governor. Overview of the monetary policy. So the objective of the monetary policy is the operational target of monetary policy shall be low and stable consumer price inflation, close to 2.5% over time, to contribute to stabilizing output and employment. Implementation of the monetary policy is done by a flexible inflation targeting regime which is implemented so that weight is given to both variability in inflation and variability in output and employment. Monetary policy influences the economy with long and variable lags. Norges Bank sets the interest rate with a view to stabilizing inflation close to the target in the medium term. The relevant horizon will depend on disturbances to which the economy is exposed and how they affect the path for inflation and the real economy ahead. Monetary policy instruments. Norges Bank's most important monetary policy instrument is the key policy rate, which is the interest rate on banks' deposits up to a quota in Norges Bank. The key rate influences short-term money market rates. The key rate and expectations concerning future developments in the key rate are decisive for banks' deposit and lending rates and for bond yields. Decision structure. Norges Bank's executive board sets the key rate. The executive board is appointed by the king in council and is made up of the governor, the deputy governor, and 5 external members. Decisions concerning interest rates and other important changes in the use of instruments will normally be taken at the executive board's monetary policy meeting 6 times a year. The monetary policy report is published 4 times a year in connection with 4 of the monetary policy meetings. The analysis and the monetary policy strategy presented in Norges Bank's monetary policy report, together with assessments of price and cost developments and conditions in the money and foreign exchange markets, form a basis for monetary policy decisions. Reporting. Norges Bank reports on the conduct of monetary policy in the monetary policy report and the annual report. The annual report is submitted to the Ministry of Finance and communicated to the King in Council and to the Storting in the government's financial markets report. The Governor of Norges Bank provides an assessment of monetary policy in an open hearing before the Standing Committee on Finance and Economic Affairs in connection with the Storting deliberations on the financial markets report. Key policy rates. In Norway, the key policy rate is the interest rate on banks' deposits up to a quota in Norges Bank. This interest rate is also called the sight deposit rate. Changes in Norges Bank's key policy rate will normally have a strong impact on short-term money market rates and on banks' deposit and lending rates. In addition to changing the key rate, Norges Bank can buy or sell in the foreign exchange market in order to influence the krone exchange rate. Norges Bank has the capacity to intervene in the foreign exchange market, but normally the bank will not use interventions. Exchange market intervention, irrespective of whether currency is bought or sold, is not an appropriate instrument for influencing the krone over a longer period. However, interventions may be appropriate if the krone deviates substantially from the level that the bank judges to be reasonable in relation to fundamentals and if exchange rate developments weaken the prospect of achieving the inflation rate.
The chart below shows key policy rate over the past years in percent and the projection for the period ahead till 2019. The continuous line illustrates the actual development in the key policy rates, while the broken line illustrates Norges Bank's projection. It depicts that with 0% error, key policy rate would be 1% in 2019. With 30% variation in the projection, key policy rates would lie between 0.5 and 1.5 for the year 2019. With 50% variation, it would lie between 0 and 2. With 70% variation, it would lie between 0.5 and 2.5, and so on.
Models for monetary policy analysis. NEMO, Norwegian economy model, was developed by Norges Bank and is a macro model for forecasting and monetary policy analysis. The model is based on international research and model development over the past 20 years and has many features in common with similar models in other central banks. Three channels through which monetary policy operates are the demand channel, the exchange rate channel, and the expectations channel.
So moving on to inflation, the government has set an inflation target for the monetary policy in Norway. The operational target of monetary policy is low and stable inflation, with annual consumer price inflation of approximately 2.5 over time. Norges Bank operates a flexible inflation targeting regime so that weight is given to both variability in inflation and variability in output and employment. In general, the direct effect on consumer prices resulting from change in interest rate, taxes, excise duties, and extraordinary temporary disturbance are not taken into account. There is no one indicator that provides a precise picture of underlying inflationary pressures in all situations. Different measures of underlying inflation are discussed in the Monetary Policy Report. Below are the charts for CPI projection and CPI ATE projection. It shows that inflation over the past year in percent and the projection for the period ahead. The continuous line illustrates the actual development in the inflation, while the broken line illustrates Norges Bank projection. The CPI projection chart depicts that with 0% error, the inflation would be 1.5% in 2019. With 30% variation, it would lie between 0.8 to 2.6, and similarly for 50% error, it would lie between 0.2 to 3.2 and so on. So let us discuss about the Monetary Policy Report of 2016. In the wake of the decline in oil prices since summer 2014, the key policy rate has been reduced in several steps. An expansionary monetary policy has contributed to softening the downturn and to facilitating structural adjustment in Norwegian economy, partly by supporting the depreciation of the krone exchange rate. At the same time, international interest rates have declined, and the interest rate level that is necessary for monetary policy to have an expansionary effect, commonly referred to as the neutral real interest rate, has probably declined. The analysis in the report suggests the key policy rate that remain close to 0.5% in the coming years. A number of banks have increased their mortgage interest rate somewhat in the recent months, resulting in a slightly higher lending rate in the period ahead than envisaged in September. The tightness of the monetary policy stance is often measured by the real interest rate. The projections in the report suggest that the real interest rate in the money market will increase through the projection period. The krone exchange rate is projected to remain stable in the coming years. Major highlights: little change in the key policy rate forecast. There are signs that the activity in the Norwegian economy is picking up at a somewhat slower pace than projected in September. In the coming year, the movement in the money market rate will diverge slightly from the key policy rate path. Lower inflation and persistently low capacity utilization. The analysis indicate that inflation will recede in the coming years. The recent appreciation of the krone is expected to push down inflation somewhat faster. Slightly lower growth but little change in unemployment. Growth in the mainland GDP will likely be somewhat lower in 2016 than projected earlier. Growth is projected to pick up further ahead. Registered unemployment edges up in the near term, but remains fairly stable over the next year. Higher investment growth. In the projection, investment growth picks up over the next 2 years as activity in the Norwegian economy rebounds. Annual growth in the housing investment is projected to show a notable increase in 2016. Moderate export growth ahead. Mainland export, excluding export from the oil service sector, are expected to decline in 2016, primarily reflecting a substantial fall in export of refined petroleum product. Overall, mainland exports show a larger decline in 2016 than projected. Higher projected house price and debt. House price inflation remains high in the near term before drifting down thereafter. Owing to high house price inflation, household debt rises at a faster pace in the coming years than expected earlier.